everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so that we can better understand tomorrow. And today, we're going to be taking a look at the crude oil of the Forex world, the pound yen. Now, the pound yen is a very volatile market. It bounces around very quickly. If you're not used to it, it is very similar to crude oil. It has very big moves, it can move pretty quick, and it can be kind of a fun market to trade. Now, today, we had a little bit of news coming out in the European session, and that's pretty obvious given all of the back and forth that we saw, and that led to a nice big run higher here from the buyers. Now, all of this happened, including the pullback, the new high, etc. All of that happened before 7 o'clock, so some of the US traders probably weren't around to catch that. If you were trading the European session, however, you had a lot of fun. But for us, we're starting out, we're just waking up around that time, right? We're coming into the office around then, so we're not able to trade it. So looking forward from that area, what do we see? Well, it's very obvious that the buyers own the market, right? So we know that the trend is up. We need to be looking to buy when given an opportunity. The buyers try pushing above of resistance right here, in this case, resistance because we're coming from below it. And it's obvious that they're holding it as a big area, right? We held it right there, we held it right there, we held it right there, all through here, actually. So, I mean, it's a big level of support. So if we can find a nice bounce off of this area, especially if we can trap in some sellers while doing so, that's going to be a really nice trade to get our hands on. We get a push down and a second leg to that push right smack down into support. To the tick, we found support off of that level. So when the buyers started coming in, chances are the first bounce off of any level is going to be a little bit difficult because you're the first one to the party. Those are usually the traders who are scaling into the move, they're willing to add more to the position, etc. But usually it's a little bit safer to wait for a secondary bounce, maybe even a little more. Sellers get a beautiful sell signal to come in, arguably off of the top of a falling channel. So there are going to be a swarm of sellers taking this, not caring that it's counter trend. They get a little bit of follow through, stop dead in their tracks on that area of support, and then turn right back around into a huge buy signal. And that is your clue to jump into the trade. Because not only do we have sellers that are trapped, but we're also cycling off of that same level of support. And now we're looking for a new high, right? So now that we have that beautiful little secondary bounce right there, we go sideways for a little while, catch a quick snap lower into an exhaustive press directly into, guess where, right into that level of support again, and that forms another gorgeous bounce to the upside with complete lack of follow through, right? If the sellers were looking to sell this, maybe they sold the highs up here, or maybe they sold the secondary bounce to the downside there, right? That little bear candle. They get this follow through, they're thinking, yeah, we're in breakout mode, we're going to pile drive this thing through the lows. And then it happens like this, right? Something's wrong, right? The sellers do not like the way that that looks. They may hang on to it thinking, okay, well, you know, it's okay. It's not that great, but it's not that good of a bull candle either. And then this happens, right? Now, if you didn't take the initial buy off of the exhaustive push down into support off of this bear candle close, this is your clue to get in, right? Because now the sellers who are in this move, they no longer want it. It's doing the exact opposite of what it should have been doing for them to sell lower. And you look at the follow through, right? Big old wick at the highs. Now, why did that wick happen? Probably due to a stop run. All of the traders got out at break even. All of the sellers got out above that candle with a really small profit. Maybe they had their stops above the highs. Either way, they got whipped out. Then it follows through with another huge bull candle. All of the leftover bears who were too stubborn to get out earlier thinking, oh crap, I messed up. Just get me out of the trade, right? They're hoping and hoping and hoping. And this is the follow through that they get. Not a chance, right? The buyers are going to swarm all over it and finish the job off to the upside for a beautiful run towards the highs. And just a great morning session on the pound yen. You can't really ask for a much more technically perfect area like we saw today in the pound yen, and definitely we're able to make it work in our favor. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it interesting, and we'll see you next time.